Today, we'll look at volume imbalances, balanced price ranges, price gaps, and the fair value gaps. We'll cover all the important inefficiency structures. We'll also look at which indicators to identify them, how to use them for our trades, entries, stop losses, take profits, support and resistance flips. You'll learn every aspect of price action trading. Okay, we have so much to do. If you're ready, let's go. Welcome our free trading course, all about price action trading strategies and smart money concepts. If you love scalping and day trading, or even swing trading, you can check out this free course. You can find the links on Google Drive or directly from my website, which is in the description. And please try to watch videos in order, otherwise it can be hard to understand. Okay, let's talk about one of the most useful price action and smart money indicators that I use regularly. It helps me a lot during my analysis. It makes it much faster. This indicator is called ICT gaps and volume imbalances. So, what is this indicator for? It's so simple. It helps you identify inefficiencies in the charts. What are these inefficiencies? Fair value gaps, also known as imbalances, you really know what it is. Secondly, volume imbalances will be something new for all of you, but do not worry, we will cover it in detail. Balanced price ranges. It is another version of price inefficiency that helps you a lot with your trading. Finally, the price gaps are very important price pockets to analyze before trading. Now, as for the settings of the indicator, it is as you can see on the screen. I set the maximum box display to 100 to get the maximum reading from the indicator. This indicator has a little weird way of identifying balanced price ranges, but I'll talk about that later on. If you're ready, let's learn what are inefficiencies. If you already know what is a fair value gap or imbalance, you may skip this chapter. I'll just give a really quick recap for the newcomers. Imbalance is an extremely simple idea with 3 candlesticks. If the first candlestick and the last candlestick do not intersect at any price level, it creates a little price pocket that goes through middle candlestick. We call this area an imbalance or fair value gap. Do not worry, I'll cover how to use it later on in the video. For example, I will not go into extreme details of imbalances because you already know it really well. As you can see, the price makes a swing failure pattern here and then sharply drops. Then it creates this nice and powerful break. It also leaves the equal lows as a target for us. You can notice the imbalance right at this point. It gives us a clear entry. Now, let's talk about something really new, the volume imbalances. The most common volume imbalance consists of 2 candlesticks. There are also 3 candlestick versions of it, however, I will not cover it in this video, so you will not be confused. Basically, if the first candlestick's body and the second candlestick's body do not intersect, however, their wicks intersect instead. The space between bodies is called the volume imbalance. By the way, the color of the candlesticks has no meaning. Green, red, blue, or yellow. It has no effect on imbalances. Now, if you look at this example, you'll notice the number of volume imbalances in multiple places. So why do we use indicators? This is it. Can you identify all these volume imbalances by yourself? No, not really. This type of indicator makes you find key structures 100 times faster. However, you cannot simply use every imbalance gap or volume imbalance. There should be a story behind it. There should be a meaningful price action and possibly a high quality setup to trade. As you can see in this example, price sweeps the liquidity below, creating a swing failure pattern at the bottom. Later on, the price breaks upwards, creating the breaker block zone. Can you notice this tiny volume imbalance right at this point? Inside the breaker block, price comes and fills the volume imbalance and makes a 4% move upwards. This is the daily chart. As a day trader, imagine finding our bias in a daily chart like this and day trading or scalping intraday charts. So we need every type of help that will make our lives much easier. Let's talk about gaps. Gaps are actually more dedicated to stocks rather than futures trading. Why? Because stocks have pre-market, aftermarket, and weekend holidays. Every type of holiday or external trading hours will create gaps in the markets due to the piling of orders. Identifying gaps is extremely simple actually. The empty space between two candlesticks, mostly drawn from high to low or low to high. Now, let's talk about Tesla. I personally trade Tesla so much. I trade Tesla options, I swing trade Tesla stocks, I day trade the shares. I trade anything about Tesla because it is a source of free money. It moves so fast and sticks to the price action really well. I also plan to open another YouTube channel dedicated to Tesla. Anyway, with the help of our indicator, you can easily spot all the gaps. This is why I love indicators. No need for me to spot all the gaps in the price. They do it for me. After the major drop of Tesla to $100, the price started to shift upwards. It actually created the first weak market structure break right here. Right after that, it created the first break of structure with this amazing gap. So Tesla started showing strong bullish vibes. If you buy Tesla shares here, let's say around $125, it reached $150. Actually, right now it is around $180. So with like 10 shares, you can make $300 or $500 easily with Tesla by only swing trading. Let's talk about balanced price ranges. Actually, there are multiple versions of BPR. However, I'll talk about the most common ones. The first is actually quite simple. It is the intersection between two imbalances. That's it. It acts as a great support and resistance area in the charts. Do not worry, I'll do individual videos for each volume imbalances, balanced price ranges, and gaps. This is like an introduction video. What is weak BPR? First of all, what are wicks? Do you really know? Actually, wicks are gaps. Confused enough yet? Sorry about it. Basically, we mostly assume that wicks are just weak spaces of prices, which prices can easily ignore. Weak BPR is based on the combination, actually the intersection of a previous week and imbalance. This is the area that prices are expected to react. Let's see some examples. Before we start, there is a fully dedicated indicator for balanced price ranges called BPR. This indicator works much better than the other indicator for BPR detection. Now for the example. Our very classic setup to trade. Price sweeps the liquidity above and makes a sharp turn. At the same time, it creates a nice target at the bottom, almost an equal low. Now you can see the BPR right at this point. So basically, what BPR is doing is giving you more precision inside the imbalance, like an exact point to enter. Let's see weak BPR. I will not explain the setup because you already know them very well. Okay, notice this large imbalance. Sometimes you ask me if some imbalances are so big, where to enter. Here is a trick for you. Focus on the previous wicks that intersect with the imbalance. This will give you more sniper-like entries. Okay, so what do we have here? We have our classic imbalances or fair value gaps, whatever you want to call them. We have our volume imbalances. We have our gaps, the empty spaces between candlesticks. We have also balanced price ranges. What are all these? All of them, simply put, just inefficiencies in the price. disturbed balances which need to be balanced and corrected. There are three major ways to use all these inefficiencies. Let's see them. Inefficiencies as targets. So inefficiencies, gaps, volume imbalances, balanced price ranges, and fair value gaps, all are great targets. I've been using them as targets for years. You can also use them as partial profit points because the price may react to them strongly. Inefficiencies as entries, my personal favorite. Probably 99% of my trades based on the setup that you see right here. I use every type of inefficiency as an entry. However, you need a strong and high quality trading setup like this one to trade. You cannot just place an entry to every single imbalance. There should be a strong story behind the setup. Inefficiencies as support and resistance flips. Now, this is something I started to use and test in recent times. If any kind of inefficiency fails, I consider them as support and resistance flip areas. Now, I check out if there are any reverse setups that I can use if the imbalance fails. And I must say, it feels really effective. I'll be doing more and more testing on this. Okay folks, consider this video as an introduction to inefficiency collections. I'll do individual videos with every type of imbalance in the future. These are great strategies for scalping, day trading, or even swing trading. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon.